Welcome to ProsperFin TV, where your financial dreams turn into reality. Today we're navigating how to balance short-term and long-term financial goals. Buckle up and join us on this journey to financial success. Think of your financial journey as a road trip. You've got your immediate pit stops. These are your short-term goals. These could be anything from saving for a vacation, building an emergency fund, or paying off a credit card debt. Then, there are your ultimate destinations, your long-term goals. This could be saving for retirement, buying a home, or funding your children's education. Balancing these short-term and long-term goals is like navigating through winding roads, unexpected detours, and scenic routes. It requires careful planning, prioritizing, and a bit of flexibility. So, are you ready to map out your route to financial success? Let's dig deeper. Before we hit the road, let's ensure we understand our destinations. What exactly are short-term and long-term financial goals? Well, picture short-term goals as the pit stops on your journey. These are the immediate needs or desires you want to fulfill within the next year or so. Maybe you're planning a vacation, building an emergency fund, or perhaps paying off that pesky credit card debt. On the flip side, long-term goals are your ultimate destinations. These are the big-ticket dreams that require careful planning and patience. We're talking about saving for retirement, buying your dream house, or even funding your child's education. Each of these goals, short and long-term, are important milestones on your financial journey. But the million-dollar question is, how do we balance these two without swerving off course? Buckle up, because we're about to find out. The key to a successful journey is a clear roadmap. And in the realm of finance, this means setting specific, measurable targets. Now, why is this so crucial? Well, let's look at it this way. Imagine you're building a house. You wouldn't start with the wallpaper, would you? Of course not. You'd lay a solid foundation first, then construct the walls, and finally, decorate the rooms. In the same vein, your financial journey needs a strong base, and this base is your clear objectives. So what does a clear financial objective look like? It's as simple as defining what you want to achieve and attaching a number to it. Let's say you're planning a vacation. Instead of vaguely deciding to save money, determine exactly how much you'll need. Maybe it's $1,000 for a week-long beach getaway, or perhaps you're looking at long-term goals like retirement. Again, don't just aim to save for retirement. Set a specific target like accumulating $200,000 in your retirement fund by the time you're 60. Remember, these numbers aren't set in stone. They're starting points, and it's okay to adjust them as your circumstances change. Maybe you get a raise at work and can afford to increase your retirement savings. Or perhaps you decide to take a shorter vacation and can reduce your savings target accordingly. The point is, having specific, measurable goals gives you a roadmap to follow. It helps you see where you're going and how far you've come. But setting clear objectives is just the start. Once you've got your goals defined, it's time to figure out how to reach them. That's where budgeting comes in, helping you allocate your resources in a way that moves you closer to your goals. So, whether it's cutting back on dining out to save for your vacation, or setting aside a portion of your paycheck for retirement, remember, every dollar counts. With clear objectives in place, it's time to talk about priorities. Now that we have our goals, how do we decide which ones to tackle first? It's all about priorities. Just like a chess player meticulously strategizing their every move, we must align our spending with our goals. You wouldn't buy a new television if you're saving up for a vacation, would you? Of course not. That's why it's essential to make conscious choices that inch you closer to your financial objectives. Think of it as a balancing act. On one hand, you have your short-term goals, the immediate needs or wants that need fulfillment. On the other, you have your long-term goals, the big dreams that require careful planning and patience. Balancing these two is like walking a tightrope. It's all about making sure that one doesn't outweigh the other. But how do we do that, you ask? Well, it's quite simple. It's all about delayed gratification. You see, the key to financial success lies in our ability to say no to immediate pleasures for bigger, better rewards in the future. It's about understanding that the shiny new gadget you want to buy today might prevent you from reaching a more significant financial goal tomorrow. Delaying gratification is not about depriving yourself. It's about making strategic decisions that align with your financial goals. It's about taking control of your financial journey, one decision at a time. So, next time you're faced with a spending decision, ask yourself, does this align with my financial goals? If the answer is no, then it's probably best to hold off until it does. But what happens when life throws a curveball at us? When unexpected expenses arise, or we lose a job, or the market takes a downturn? How do we deal with these unforeseen events without swerving off course? Let's explore. In every journey there are unexpected detours, so how do we prepare for these financial surprises? Just as a road trip can be disrupted by unforeseen obstacles, your financial journey can be affected by life's unexpected turns. Let's consider this. You've got your financial goals in sight, you're making progress, but suddenly, an unexpected expense pops up. Maybe it's a car repair, a medical bill, or a sudden job loss. These are the equivalent of potholes and roadblocks on your financial journey. They can seem daunting, but with the right preparation, they don't have to derail your plans. In the world of finance, this is where the importance of flexibility comes into play. It's about having the ability to adapt and adjust your plans when life throws you a curveball. Think of it as having a GPS that recalculates your route when you hit a detour. One way to build flexibility into your financial strategy is through an emergency fund. This is a stash of money set aside specifically for unexpected costs. It provides a financial cushion, so when surprises arise, you can cover them without dipping into funds allocated for your other goals. But what about larger surprises that could potentially have a more significant impact? This is where insurance policies come into play. They provide a safety net for serious events like serious illness, disability, or damage to your home. By transferring some of the financial risk to an insurance company, you're protecting yourself and your loved ones from potential financial catastrophe. On the other hand, market fluctuations are another type of unexpected event that can affect your long-term investments. But remember, investing is a marathon, not a sprint. It's about remaining committed to your financial plan, even when the markets are volatile. Now, we've reached the most important part of our journey, staying the course. The road to financial success isn't always smooth. It requires discipline, resilience, and perseverance. You see, financial discipline is like the steering wheel of your journey. It helps you stay on track, make smart decisions, and resist the temptation to veer off into the land of impulsive purchases and unnecessary expenses. Every dollar you save today isn't just a dollar in your bank account, it's a brick in the castle of your financial freedom. Each penny saved, every coin invested, contributes to the fortress of stability and security you're building. It might not seem like much, but just as a mighty oak grows from a tiny acorn, your financial future grows from these small, consistent savings. But let's be realistic. The journey towards financial freedom isn't always a sunny drive through the countryside. There are storms to weather, mountains to climb, and sometimes you might even lose sight of the road. But remember, the rainbow comes after the storm. It's during these challenging times that your resilience and perseverance are truly tested. When you're faced with financial storms, it's easy to feel overwhelmed, to question your goals, or even to want to abandon your journey entirely. But these storms are temporary, while your financial goals are long-term. So buckle up, hold on to your steering wheel of financial discipline, and stay the course. Staying the course doesn't mean being rigid. It means having the flexibility to adapt to new circumstances, the resilience to bounce back from setbacks, and the perseverance to keep moving forward no matter how slow the progress might seem. So, as we navigate through the winding roads of our financial journey, let's remember that it's not about the speed, but the direction. It's not about the bumps in the road, but how we overcome them. And it's not about the destination, but the journey itself. Remember, every dollar saved today is a step closer to financial freedom tomorrow. As we conclude our journey today, we hope you're feeling more confident about balancing your financial goals. We've covered the importance of setting clear, measurable objectives, aligning your spending with your priorities, and building flexibility into your strategy to weather life's unexpected turns. But most importantly, we've emphasized the value of perseverance because reaching your financial goals is a marathon, not a sprint. If this video has been helpful, please show your support by liking, commenting, and sharing it with others who might also benefit. And remember, your path to financial empowerment doesn't end here. ProsperFin TV is your go-to resource for expert financial advice. So don't forget to subscribe and hit that notification bell to stay updated on our latest content. Until next time, keep chasing your dreams and prospering financially.